Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite studio in Times Square, New York City, we have Brady Beals, Director of Investment Solutions at Luma Financial Technologies. We're going to discuss cap alts and why it's important to understand the distinction from other alternative investments. Brady, it's great to have you with us. Welcome back to TradeTalks.
Great to be here.
Explain to us what cap alts are. I mean, the alternative investment category is so broad. What are cap alts and why is it important to understand the differentiation?
Certainly. So to take a step back, what are alternatives? What are alternatives trying to accomplish? They're really trying to accomplish modifying or changing the characteristics of a portfolio. That's usually done through real estate, through commodities, through private equity, et cetera. And really the intent is to do things like enhance returns, lessen exposure to the equity markets, potentially lessen credit risk. Cap alts do the same thing, but they're actually done through stocks and bonds. So it's a familiar investment for investors, for advisors, but you're still changing the characteristics of your portfolio.
So as Luma's Director of Investment Solutions, you spend a lot of time speaking with advisors. What are some questions you're getting and how do you suggest advisors approach the use of cap alts in portfolios?
Sure. So really three main questions. One is, what's the catch? Two is, how are other advisors using cap alts? And then three, what happens? How do I purchase the product or the investment? And then what happens after I make the investment? So the first part, what's the catch? So it sounds almost too good to be true that you could stay invested in U.S. equity, but lessen actually your downside exposure to, let's say, the S&P 500. It's important to take a step back. Any investment has three legs to it. One is return potential, two is downside protection or downside risk, three is your time horizon. So really what cap alts take advantage of is that you're actually determining your time frame. So let's say it's a 5-year time frame. Because you're willing to make that choice, as opposed to equities where you could buy and sell every day, you're able to actually enhance the other two legs of the investment, whether by enhancing returns or increasing downside protection.
So when you say, let's say 5 years as the example, is it almost like a closed-end fund? You're locked in for those 5 years?
You are. There is some liquidity, but really the intent is to buy and hold for 5 years.
Right.
You could almost look at it like, at least for structured notes, you are investing in a wrapper that's a bond. It's issued by a bank, it's senior unsecured debt. So similar to a bond that you would buy and hold it for 5 years, similar story for a structured note.
For advisors looking to start in cap alts, what are some of the customization benefits and features that you might not see in other types of alternative investments?
Absolutely. So going back to the original point, you're able to augment the return characteristics of stocks and bonds. So investors, advisors are already familiar. You don't have to go out into other exotic or unique alternatives. There's already some comfortability with what you're investing in. Two is you're actually able to dictate what risk you're taking on and what exposure you're taking on. Huge distinction from alternatives where there's a supply and demand problem. With structured notes, with cap alts in general, you're actually able to dictate the terms of the product, which is a little bit different. Three, there's a lot more competition. So because terms are apples to apples, there's about 15 different issuing banks in the US. There's other providers of cap alts outside of structured notes. That really allows for the competitive process to enhance the optics of the investment.
Let's talk about technology that's available to advisors today. How does financial technology firms like Luma enhance overall experience and effectiveness of cap alts for financial advisors and their clients?
Absolutely. So technology has certainly transformed what traditionally was a high net worth or institutional investment product to be more widespread, to be more available to retail. How is that done? Our interface, for example, allows the ability for advisors, number one, going back earlier, to see what other advisors are already doing with structured notes. Two, they're able to analyze, see illustrations, see intuitive analysis on what type of investment they're actually looking to create. Three, going back to what happens after you make the purchase, they're able to track performance, they're able to track events, get notified of events. So it really streamlines and mainstreams what used to be a more of an exotic investment type.
Luma and SpiderRock recently announced a partnership to provide your users and clients with access to structured note replications, SMAs. Tell us more about that partnership and what and how you plan to expand.
Yeah, very exciting. So kind of the basic of it is it's an investment that can replicate a structured note. But it's actually done through a separately managed account. So what does that do? It increases transparency. So as opposed to getting kind of a fully packaged product, advisors, investors are able to see individual investments, individual options that go into the replication. Two, you're able to actually choose your credit risk. So you could put in treasuries if you don't want any credit risk. Or if you want to try to increase returns, you could actually look at lesser rated credit risk to try to enhance returns.
All right, Brady, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.